Hi, real estate enthusiasts. I want to start talking about operations. Many people out there right now, you can find advice on where to find deals, how to find deals, what software to use. And obviously I'd love to share that information with you guys. But I also want to start delving in a little bit deeper on operations. Because as you may have seen in 2022, that how an investor operates their properties can make them through a hard time or can break a deal. So sometimes things just happen, markets happen, and deals just, they're not structured appropriately for funding, or you just bought at a wrong time. I mean, there's a lot of other pieces into it, but operations is so powerful. So I want to kind of just touch into operations a little bit right now, and starting off on paying yourself. So that's kind of the first thing when you are underwriting a deal and you're planning on keeping it. Obviously, if you're not planning on keeping it, then how long is the flip gonna last? So you also wanna kind of calculate that in as well. So when you're looking at commercial properties and you're looking at flipping the deal, you also need to make sure that you're paying yourself as well. This basically, operations is anything that's gonna last longer than 3 to 6 months. That needs to be operated. Obviously, anything in 3 to 6 months is also being operated, but your numbers are gonna be a little bit different if you set it up that way. So when I'm talking about operations, I'm talking about something that you're gonna buy and keep, or you're flipping it, but it's a commercial deal, so your flip is more shortest a year, but usually about 3 years. That still aligns with operations because one of the business models of the flip is how you're operating it. So your flip is actually, you're transitioning the business to be profitable, and so you're able to sell it at a higher cost. So it's a little bit more than just making it aesthetically pleasing. You're actually bringing in the profit and increasing the profit. And so you've actually flipped the business to then flip the real estate. So that is a huge part of operations. So I want to make sure that when you're doing your numbers, you're paying yourself. I want to just kind of highlight this a couple of times because a lot of times real estate investors, they either look at themselves as a passive investor or an active investor, which yes, you need to know which one of those two you are. Are you passive or are you active in a deal? If you are active, how are you active? Because that is a huge piece of how you're getting paid. So are you actively finding the deals? And so you're getting an acquisition fee up front prior to at closing. Are you getting an acquisition fee so you're getting paid up front? Are you the active investor that's actually overseeing construction and getting that fee as well? So I know, especially like in the multifamily sphere, you can tack on like an 8 or 10% like construction disposition if you are the overseer of a lot of the rehab and repair and everything that's in the business model to, turn that property around, turn the unit around. So you're putting that in there. You're like, I am the active investor who is overseeing all construction, all vendors, whatever it may be. And so because of that, I'm making an additional 8%. So as active investors, we usually have a piece of the equity, a piece of monthly distribution, quarterly distribution, yearly distribution, like however it is. But how else are you active? So for that example that I just provided, you could be the construction manager overseeing, all the repairs and everything. So you are also on top of whatever else you're in, you also are getting that. So I like to point this out, especially on individuals who work with like one partner, two partners, three partners, something like that. You want to define your roles a little bit. So you have 2 or 3 investors. You might all be in the property the same amount of money. And so you're getting your distributions based off of that. But what if one person is actually managing the property? So let's say now you're either managing the property, or you're managing the asset manager, or you're managing the property manager. Either which way, there's always someone reviewing the monthly reports, who's overseeing everything, just making sure everything's aligned, making sure that the occupancy is where it's supposed to be, making sure that your business model is actually being, implemented. Because a lot of times investors will go into a deal, you do your acquisitions, you raise your money, you do everything you need to do, and then you close on it, and you don't actually then give that to the property manager. Your whole model for business of how you're going to turn around this property and bring in the new tenants and change the community and all these things wasn't then relayed to the property management company. And so none of that can be implemented. So pay yourself, but pay yourself whatever you're working. So you want to be fair. Obviously, you're going to pay yourself either dividends on the property or equity on the property. But if you're an active investor, you also want to make sure, oh, look at that. Whoops. You also want to make sure you are getting paid for your time moving forward. So there's a lot of discussion about investors actually recouping, capital for their time just to find the deal. I mean, obviously that's what real estate agents do. Everyone's like, oh, they make so much money on one deal. And it's like, well, yeah, because, they worked for 3 months on 17 deals and they closed on 2. So those 2 are recouping the other 15 losses of deals that they were working at and didn't pan out and kind of fell through, or, people bailed or whatever it may be. That's the same as investors. People don't just close on deals. I mean, you spend months and months and months doing your due diligence, touring properties, working with brokers, networking with other investors. And so there's a lot of initial work that goes into it to actually bring together a deal. And so there is acquisition fees on the front end of a lot of commercial deals. And to me, it's only fair. I mean, if I am a passive investor and I'm getting some pretty sweet deals, that's because the team was so active initially that I feel like that they should get paid for that. But I also want to see in a deal that that same team is still going to be getting decent returns moving forward, because I want them to be as excited as getting the deal as having the deal. So that's why I say you want to make sure that in your business model, you are aligning yourself with your title and how you're going to get paid. So if you are overseeing just admin, are you getting compensated for that? So if there's admin staff, are you overseeing the property managers? Are you the property manager? So if you're running the property yourself, so many mom and pop shops, they don't pay themselves. So it's really hard to sell it because they're like, oh, we're making like $4,000 a month. I just want to sell it to another investor. And that investor is like, I'm not going to run it myself. And a property management company is going to take 8%, which is going to eat up most everything. And, a lot of times mom and pa's numbers aren't exactly accurate. Plus then you put a mortgage on top of it. So it doesn't, the numbers aren't completely accurate because mom and pa don't have the expenses that they're supposed to have in it. They're not actually paying themselves for work. They're just taking any profit from the company. And you want to make sure you're just taking profit from the company and paying yourself a wage and paying yourself different wages, saying, okay, if you're the handyman and the admin, let's have different rates for those. Make sure you're paying yourself the different rates. So let's say you have a property with a partner and you have a handyman and an admin staff. Well, what if this one, they quit? Well, someone's got to take in that role. So what do you have aligned with your partner when all of a sudden there's like 3 to 6 months with no admin? Who is running that property and are you getting compensated for that? So I am not saying one way or another is the right way. You could easily be splitting with your partner 50% of whatever comes in, and then when the admin quits, you just divvy that 50% to both partners, and maybe you guys just, split the admin work 50-50 and it just makes sense. It's just simple and that's just how you want to keep it. And that's great because you're paying yourself. So it doesn't matter how it's created. Make sure as a real estate investor, you are getting paid for the role that you're working. Okay? Because so many of us are like, oh, I just get, whatever's left over. Oh, this property makes me $150 a month. It's doing awesome. It's great. And then the AC breaks, or the tenant is calling you like every other day. And you're like, when you actually like sit down and do the books, you're like, I'm not actually making $150 a month. So it one helps you break down which properties are actually profitable. It breaks down and it really helps you see an opportunity where maybe you could give it to somebody else. Maybe where you should be hiring someone else, because maybe someone else's time, you could pay them less than you'd pay yourself, and you're making true profit because now someone else is getting all those calls and doing the maintenance, and you're making $100 a month instead of $150 a month. But you're not having to do any of that other stuff because you're paying someone else that $50 to take care of all that other stuff. So just make sure you know your numbers and that you're getting paid. So that's the biggest piece, and make sure that it's in your initial underwriting and it's in your exit strategy. So what is your exit strategy? Like we always have like 2 or 3 exit strategies. So make sure that if you're flipping it, you have a backup plan to hold it. And so I just say that because if you have a partner and you're planning on flipping your property in 6 months, have an idea of what that property is going to look like if you can't flip it in 6 months. Are you then going to start getting some return on your money? Or are you then going to have one partner walk away and one partner holds it and keeps it and then operates it moving forward? You really need 2 exit strategies in real estate. I've talked about reserves before, obviously you need a reserve, but you really want to have that idea, and then you really want to be able to talk to people, because there's usually one partner that's always working more than another. And so have those conversations to make sure everyone's being compensated appropriately, because I see it so many times in deals, small or large. It doesn't matter which one, because people don't feel like their time is being valued and that they're getting compensated for it. Then they start not doing the work, even if they're an investor in the deal. So it's unfortunate to see. We see it with employees all the time, when they start not seeing the value in the job, or they just don't feel like they're getting anything back for what they're putting out. It's just human nature. So again, you're gonna burn yourself out really quick if you are getting rental properties and you have a couple of partners and you are the one putting it all the time. You are now overseeing all those properties and all your business partners are getting 50% of everything. So split 50-50 with a 3% or 8% management fee on top of it. And so you are getting paid to be the manager, but you're also the investor. So you're getting paid just like they are. You're both investors in the deal, so that should be equal. But you also are actively working on that deal to make it a better deal. And so you need to be compensated appropriately, because guess what? No one would be batting an eye if you had a third-party company that you were paying. So if you had a partner and you were splitting 50-50 profit on that deal, but before that split, you are paying a property management company to operate that property, your partner's not going to be saying anything at all. So if you could do it for a little bit less, or you have a process in place that you got, or it's next door to you, or you already have tenants in place, and so you, for some reason, want to manage it yourself, you need to have that conversation with your partner and say, guess what? I am doing the extra work to make sure that we are getting these equal splits and it's coming in every month, and that the property is being taken care of and the tenants know that we're here, and so they're going to keep paying. Like, you kind of got to stay up on top of these things. If they feel like you're gone, they lose responsibility to pay. So again, get paid for the role you are in. And as investors, we play multiple roles. So you could be in a commercial deal and you could be passively invested in your deal. So you could be getting your passive returns, plus you are the syndicator on the deal. So you're part of the syndication team, and so you're getting that percentage because you oversaw the whole property, and then you have a piece of what you're taking over. And then if you are one of the investors that's actually going to be hand-holding that property moving forward, because not everyone on the syndication team takes that property and moves forward. So make sure that if you are the individual that's taking a little bit more of that risk, that time, that responsibility moving forward, that you then are getting an additional piece of it, or at least have spoken. You don't have to always get money for it, but you need to have that conversation and not just let it be. Okay? Don't just get in a deal and say, whatever, I'll take care of it. I'll just do all this work and no big deal. Like, I'm getting equity at the end. I'm a part of the deal. I feel responsible to play my part. Don't do that. You will burn out so fast. And if you burn out, you're going to ruin it for so many other people, when you could have just been making like an extra 1% to feel like your time was being valued, and to make huge profits for everyone involved, because you are actively working, you feel valued, you're in the game, and because of it, you're making all the other returns to everyone even greater, so everyone's happy. Because guess what? Now they're gonna make more money because you're actively involved. So they're not gonna notice that 1, 2, 3, 8%. They're not even gonna notice it, because it is producing, it's doing what it's supposed to do, because there's someone in place. There's a role in place that someone feels valued because they're getting paid for it, or they have additional equity in the property, or they have some other incentive that's having you want to, stay active in the deal and keep on top of it. So again, there's many different ways you can do it. Just make sure you have the conversations, you understand who you are in the deal. So if you don't know who you are, no one's gonna pay you for it, okay? So make sure you know who you are and make sure you're getting paid. Don't just wait on the back end and say, I'm just gonna wait for equity. That property is just gonna fall apart. Like, no, there's no one to step in. No one's gonna wanna do anything. Once the tenant moves out, no one's gonna step in because they're gonna be like, ooh, I don't know. There's no one in place anymore and everyone's busy and you're not getting anything for it. Now you're just scrambling because you're like, I don't want to lose my money. But that's not the attitude we want to go in on real estate. You don't want to go in like, shoot, I'm going to lose all of my investment now. I got to step it up. I just got to get somebody in so I can sit back again and make my money. Okay. We don't want that going into it. So have the hard questions answered, have the worst case scenarios figured out, and make sure that everyone is getting paid, everything's fair across the board. So everyone feels like they're contributing, they're doing their part, and they're getting compensated for whatever they have time and value for. So again, just a quick little piece of operations, and I'm going to touch more on obviously more specific things on operations, more aligning with commercial deals, and hopefully to enhance your business, make it perform at its peak ability, and so you guys can keep riding through whatever market comes our way, that we can keep riding through because we are operating our portfolio to its fullest potential. So thank you guys so much. Definitely subscribe below, leave some comments, and stay tuned for the next video.